Good afternoon, ladies and gentlemen. Welcome back to the channel. This is Young Money Investing. My name is Liam. It's Sunday afternoon, and you know what that means. It's time for another weekly technical analysis. We're going to look at some large cap stocks. We're going to look at some small cap stocks, and above all, we're gonna figure out, some trends, and we're going to establish how to make money. So starting off on the S&P here, you can see that we had a pretty ugly week. We are on the weekly time frame, by the way. We had a pretty ugly week, very nasty engulfing bearish candle here. For those of you that don't know, an engulfing candle is just a candle that completely engulfs the preceding candle, meaning that it's larger than. A very nasty bearish engulfing candle. A strong move to the downside. We closed the week down almost 5%, so that's not great. We are holding, it seems to be there's some very slight support around this 38.82 level. So definitely watch the open tomorrow morning, see how price action reacts to that level. If we go through it towards the downside, we of course have the bottom of our triangle at around 36.50. And if we do kind of get support here, bounce off it, head back up, I would be looking for our downward trend line to act as resistance. So those are kind of your two price actions. Let's take a look at the daily time frame. Nothing too spectacular to see here. I mentioned last week that 41.50 level, so that could also act as a short-term resistance. But that almost perfectly coincides with the trend line anyway, so they kind of go hand in hand, so I would expect a lot of resistance to kind of step in at that level. Personally, I'm really just waiting for this triangle to break. I know that's where the big move is going to be, so I'm trying to capitalize on that, and I'm trying to make sure that I have some capital available in order to trade that. So I think there's going to be a big move here. Switching very briefly to a more fundamental perspective, there's a lot, and I mean a lot, of downward pressure on stocks right now. We still have the conflict in Ukraine. The Fed is still raising rates, potentially another, 75 basis points. We're entering a recession. We're entering an extremely inflationary period. So there's just kind of all these things, all these factors, just putting a lot of downward pressure on stocks. And on top of that, on top of just raising rates, the Fed has stopped quantitative easing and is starting their quantitative tightening, which means that they are selling assets off of their balance sheet. Now, I don't know about you, but the Fed has trillions of dollars in assets on their balance sheet. So if all of a sudden they decide to start liquidating that, that's going to be an immense downward pressure on asset prices. So some things to keep in your head here. I'm not a pure technician. I focus on the fundamentals as well, particularly to help me identify which way that I think trends are going to go in the future, not necessarily where they're heading right now. So I think there's a lot of negative things out there for assets, particularly stocks and particularly futures. And so personally, I think this triangle is going to break to the downside. We're going to get a very ugly sell-off, potentially, like 1,000 points potentially, which is a massive sell-off. Anyway, let's go take a look at the Russell. We'll look at some small cap stocks. So looking at the Russell, we're kind of holding our 200 moving average, which is this kind of purplish pink line right here. So we are holding that on our weekly close. The Russell closed 4.5% down. Kind of the same thing, bearish engulfing candle, not quite as bad as it is on the S&P. And so I would watch this open too. The Russell kind of likes to trend a little bit. You'll notice we trended here sideways, trended sideways here, trended sideways here. So the Russell it kind of tends to kind of consolidate in tight little channels much more than the S&P does. So I would keep an eye out for something like that and then be prepared for a big break. Either way, I drew this trend line, but I don't really like that trend line. So I don't really consider it a great point of reference. It's a little bit too steep. It's only been tested twice. So I think that price action could very easily hold this level and either just go sideways into a consolidation phase or potentially hold it, bounce up, break it, and then depending on how the fundamental factors play out, we could go back down. So again, some things to keep in mind. We'll look at the daily time frame here as well. We do seem to be finding some support at that 1785, 1786 level, which, you know, even previously we found support here in September 7th. It acted as resistance in June, and then there was some, you know, little price action back here in May as well. So there is something to be said about this level. It also just happens to coincide with our 200 weekly moving average, which is very nice, so keep an eye on that. I want to take a look at gold. Gold is very interesting to me. So the last time I talked about gold, I talked about this double top, which was put in place back in March of this year. Since then, you can see we've really just gone lower. I'll get rid of some. A little better. This is our support line right now. It also coincides with our 200 weekly moving average, which is good from a support, from a bullish perspective. But you can also see we've touched this support 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 10 different times, unless you kind of count this as one, which we'll just count it for one. So 1, 2, 3, 4, 5, 6. 6 different times we've touched this trend line. Now there is I guess we'll say hypothesis. There is a hypothesis, I guess you would call it, that the more times a trend line is touched or a support line is touched, the weaker it becomes. So we're now on our 6th touch. As well as we have this 200 weekly moving average. So I do consider that struck support, but I'm going to be watching gold very, very closely, because if we break this level right here, if we break this 1680 level, if we break our 200 moving average at 1679, I think that there is a lot of downside for gold, potentially back down here to that 1367. That's a purely technical level. There are, of course, lots of other places we could catch some support. Maybe somewhere around that 1544 level, or even that's about the same 1525, 1530. So there's lots of ways this can go, but I think that if gold does break this level, we are going to see a very, very sharp sell-off. Okay, one of the last things I want to touch on, this is a stock that I'm watching this week. This is something that I kind of want to add into this weekly technical analysis video. Uber is on my radar right now. We'll draw a couple of lines here. One, we'll just draw a nice little channel here. My trend line's gone. Come back. There. So we have this nice little channel here, but you can see that we have this kind of U-shaped pattern here into another smaller U-shaped pattern right here with a little. I'll zoom in here. Last week we got this tiny doji candle right above our trend line. I think there's about to be a trend change here. I like this double U pattern. And so we'll just zoom in real quick to the daily time frame so you can kind of see a little bit better. We have this U pattern, 1, 2, come back down. This is our 200 daily average. We've touched it, we've rejected it, we've gone back up on, let's see, we closed, well, technically it was negative because it was a gap down, but that was a green candle. I think that if we can get back above this 33, and what's the high on this candle? It's 34, 33. So if we can get back to that 33, 34 level, I would probably take this long. As far as targets go, let's see here. I would probably use probably about 40 as my first target, and then probably about 47 for my second. If you wanted a third, maybe like 52. I don't know if we'll go that high though. That seems like quite a move, because that would take us from let's say 34 to we said 41, that's 18%, up to 47, that's 36%. If we went up to 52, that's about a 50% gain, which seems like a lot. But anyway, that's something that I'm watching this week. I hope you guys find this useful. I hope you go out there and you absolutely smash this week. That's really what I'm trying to do. I'm trying to help all the retail traders out there just, get away from the kind of degenerate Wall Street bets and kind of come over here and get some quality trading ideas and some quality trading principles put in place. So hopefully this is helpful for you guys. I really like doing this. I really hope that it helps you identify trends and establish, better entry opportunities, and you guys are all making money hand over fist just like I am. Thank you so much for watching. I genuinely appreciate every single one of you guys. You guys are the best. Mad love for every single one of you. You guys have a fantastic week. Peace out.